Welcome back. For the past 21 video, no, not that many. For the past number of videos, we have been looking at JPEX as our stock example to learn how to paper trade penny stocks and do day trade on them. And I've been going along the technical analysis route using this stock, but then so I'm recording this over the weekend. February is February the 6th, Sunday, and it so happened that this stock on Friday took a nosedive, as you can see here. So we switched from doing technical analysis to doing some postmortem due diligence to see what's going on and why it tanked. And we got as far as by learning a little bit about JPX Global Inc. And it's basically a dormant, public, small little penny stock company, and VMost, private company that was going to do a reverse merger with JPX to become go from. It was the easiest way to go from private to public, and I would so I had showed you how to go to sec.gov and find out about public companies and their filings. But that's not easy to do with private companies because by definition, as a private company, they don't have to release, they don't have the same requirements as public companies do. So learning information about them is very difficult as to what is the truth and how are they doing financially. As I was trying to see what I could find in, I don't know, news postings, articles to see, to get an idea of is is the most profitable. And I actually stumbled on something else which could be an explanation for Friday's fiasco and what it has to do with the merger. If you're interested in watching, just Google this right here. I'm not going to even post a link to it. And essentially, what he does is what I thought might be happening is there was a court filing, I believe on Thursday, and the bottom line is that this court filing could stop or delay the merger. So the merger essentially is not complete. There may have been money exchanged where VMost has given money to whoever JPEX Global is, whatever's left of them, but that doesn't mean that they have taken over the stock. So even though we saw on their website about the company, the stock info where they're showing the JPEX stock chart, that doesn't mean they have control of that stock. And as a matter of fact, I did a search in the SEC.gov, and they don't know anything about VMost. So it's not complete until it's complete. And so the fear on Friday was that this merger might not go through or be delayed or what have you, and that's why everybody was dumping. Now this guy is saying that it was after hours. I think it was even on Saturday, that would be the 6th of February, that the situation was cleared up and the merger has been granted.
Therefore, court orders for good cause appearing, and after review that the motion to discharge custodianship is hereby granted. And now VMost is officially merged into JPEX. It is complete. We did not know this until after hours, and that is why the stock is still down 63%.
And I believe that's probably true. I don't have any reason to doubt that. But there's still the open question of just how profitable is VMost, because are they just a staffing company? Is this new product or service that we covered real and so forth? But they're private. It's not easy to get their profitability where they stand as a company. So, and it's very late right now, and I have run out of time, and I need to decide what am I going to do tomorrow morning with JPEX stock. I'm kind of glad this happened because you're probably going to face that situation yourself. You're going to come up against a time where you did not have enough time to do due diligence. You have some position in a stock and you think you got some possible good news, but does it mean you're going to enter into more plays or you're just going to be happy to get rid of what you have? So here's what I'm going to do with mine. And this is the part, and I've been thinking about this since, you always know in the back of your mind, hey, I'm paper trading. This is not really my money. You're going to take more risks than you would if you were using your real money. But I'm curious. So we're back at our Webull.com trading platform where we're doing paper trading. Here is my current position with JPX. I'm at a loss of $1,100, but really what I'm concerned about is the price per share. So my cost basis, because I bought them at different blocks, as a matter of fact, I can show you that right here. We have blocks of 303, 285, 281, 275, 260, 189. So do I essentially, so this becomes my average price or cost per share, meaning that if I place a sell order to sell 70,000 at 0270 cents, then I would break even, right? I'd get my money back and that would be it. I could do that. The situation or the choice or decision becomes a lot harder and a lot more real, not only if you're doing real trading, but can you imagine eventually as these day traders get more experienced, they do bigger and bigger buys. We're talking, lots of money here. And so what are they going to do? I am gonna go for broke here because it's not my money. And I'm going to place in some buy orders at different levels and not a sell order. Unfortunately, for paper trading, we don't have the conditional trade feature available to us. In fact, yeah, and actually I should say that on Webull.com, you cannot, if I'm not mistaken, you cannot even trade the stock at all. And it's an OTC stock, over-the-counter stock, which I was going to get into, but I didn't. It's not listed on the major exchanges, New York Exchange or Nasdaq. So in Webull, you can't trade this anyway. You can on Fidelity, but we haven't gotten there yet. And there's conditional trades on Fidelity, but again, we haven't gone there yet. So we're going to have to, we want to limit ourselves to paper trading for now because we're learning. So we're going to do with the tools that we have. So I'm just going to place some buy orders. Back some time ago, I talked about averaging down. So you bought some blocks of shares at a certain price up here, and you think you can have a safe play by averaging down, keep buying lower price shares but bigger blocks to make sure that your average price comes down enough because you think it's going to go back up enough so that you can recover your cost by averaging down. Because if you don't average down, then the shares that you have are much higher price. But that's very risky because obviously you're sinking more money into a stock that's falling. But what I'm going to do because of the supposed good news is I'm already up here anyway. I'm up here at 270. It would have to rise that high for me to get back the 1169. So I'm going to place some buy orders, but I don't know where this is going to start. So I'm going to place some blocks at different locations, maybe not too many. And again, because I work, I don't know if I'm going to have any time to watch this or how fast things are going to break one way or the other. If I do have time, I may see that the average price went down enough because I actually bought some blocks jump down enough so that then if it comes up anywhere close to my new lower average price, then I can place a sell order for the whole bucket. Or I can just hold everything and see where it goes. I decided to place 3 buy orders. So I have a big buy. Remember, I have 70,000 shares here, right there. I decided to place a large order of 40,000 shares at 109, so up here somewhere, and then smaller 10,000 block order at 120, and then another 10,000 block order at 140. So I had 3 buys with the biggest one at the bottom. And then, so that would be the case more or less whether I was going to sell at cost or if I just held it. So I still have to put the buy orders in. Or my other solution or option is just sell mine at a loss completely. So that's how we're going to leave it, and this is how we're going to stop this video. And hopefully I can record the action or maybe after action on tomorrow, and we'll see what happened and who was right.